Okay, now I'm finally got this. I think I'm logged into everything I need to be logged into. Okay, coffee's cold. When we reload, be back in 3, maybe 2. Sounds really good. Oh, that sounds really good. Let me see if I can fix the music. Let's stop that one. That doesn't sound like a good song to me. Oh, I guess the app doesn't work anymore. The royalty-free app fails. Nice! Well, I guess that's our cue to go, huh? Sure as Sherlock. All right, hang on. Huh? How do I look? Do I got it? All right, I'm smoking hot like fire. When I turn, you desire. I'm fresher than you, 'cause you white. All right, so I guess we got that going. Yeah, I think we're ready. What do you stink? Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we want to do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne. I'm a currency trader just like you. I've been doing currencies for about 20 years. 30 years ago, I sat on a board of directors for a nonprofit organization in New York City. I oversaw 27 different offices around the United States of America. I ran the Western United States for the board. And who else was on the board? Well, let's see, Vice President of General Electric, Vice President of Arthur Andersen, a representative of the United Nations, former president of AT&T, and somebody who ran the Soros Fund, somebody named George Soros. So anyways, George put his arm around me and he said, Wayne, may I call you son? Son, I have one word for you. Forex! Well, everything is true except that whole thing that George Soros did. But he was on the board, nonetheless. Yeah, and a 20-year-old Wayne was there learning how to, I don't know, be a kind-hearted person. So anyways, here we are all these years later. Wouldn't it have been cool, though, if he had done that and said, Wayne, why don't you come work for me at the Soros Fund? At the Quantum Fund, sorry. Wayne, why don't you come work for me at the Quantum Fund? I'll teach you everything about Forex. That would have been interesting. But anyways, you might love George Soros, you might hate him. But nonetheless, 2 degrees of separation. So I started out as an entrepreneur and then a venture capitalist. See, at the age of 21, I was running a company of 3,000 people. So it was a good start, not bad. So later on, what I found after having worked for big companies like, well, I worked for Apple. I owned Apple shares at $6, held them for 30 years. I worked at Cisco Systems, you know, they run the hardware for all the internet, that kind of stuff. And then I worked for startups, and then I coached startup CEOs, and I had a big team and faculty of venture capitalists and lawyers and all that kind of stuff. It was very interesting, but after having done all of that and run my own businesses and coached others, I ran into this thing called Forex, and it turned out it was the purest form of business that I'd ever seen in my entire life. Like, why would you want to run a restaurant? You wake up super early in the morning, you get a bunch of groceries, and then you chop it all up and you fry it all up, and people show up maybe at noon, and you serve them food. And you have waiters and waitresses and cooks. You have to pay a lot of money to have a kitchen and decorate your dining facilities. You got to do a lot of marketing and advertising. Insurance must be crazy. And you don't know how much food people are going to eat tomorrow. So what do you order and how many steaks? Boy, is that difficult. But why would you go through all of that? So you might make money. So when you think of like all the businesses in the world exist to provide a product or service so ultimately they make money, then look at what we do. We buy and sell money. Money is our product. Money is our service. Money is our inventory. It's the purest form of business ever created by mankind. Love it. So here we are, we're pure business people. Right on. So if you want to talk fundamentals, technicals, trader psychology, I'm into it, baby. Let's do it. Okay? And we have a complicated world now. We have a contracting business cycle, probably. We're looking for evidence of that in the economic data. We have geopolitical risk. We have earnings seasons right now. Couldn't be more fun. Huh? Couldn't be more fun. Yeah. So anyways, look in the description below the video. Boop, 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 boop. You will see links to resources that you may find helpful. Okay? I've done a lot. I've seen a lot over 20 years of me doing these live streams. And yes, I've been doing live streams longer than YouTube. I've been posting videos to YouTube longer than Mr. Beast. But anyways, check this out. You need a broker. I recommend tradersway.com. They're an ECN. It's a trustworthy firm. It's an ethical business model. They don't trade against you. They're a small boutique firm, which means they don't have 100,000 people on one MT4 server. So, you know, they're quick, they're nimble, it's good. Like, you should check them out. They have lots of different, you know, crypto, metals, energy, stock indices, you know, right? Everything that you need. You should check them out. Also, you should check out Investor Bootcamp. That's a community. I used to call it FX Bootcamp, but I switched it over because we have bigger conversations now. And one of the things that we're doing today is the principles of trading stock. We were going to do business cycles and seasonality and then combining them so that we have a base of discussion for 1 week from now. So today we're doing the business cycles and seasonality. Next week we're going to talk about, well, what happens when they collapse. Can you know there's a recession faster than everybody else? Yes. Can you protect your money before it crashes? Yes, you can. And is there a way to know when to buy when everyone else is freaking out? Absolutely. I'll teach you in 1 week. Let me get you the link to sign up for today. We've done valuation models. We've evaluated or placed a value on one stock. Then we analyzed how to look at different stocks or different investment opportunities, so you can compare like a stock investment to a bond investment to a real estate investment, which one is best. Last week we covered risk-adjusted performance analysis. So now we're going into the business cycles and seasonality. And then next we're going to talk about you know, when to hedge, when to buy back in, because these are the most important times for you to make money. And you can't make money if you've lost your money. So next week in particular, we're going to talk about how to save your money from disaster, and then when there's blood in the street, when to know how to get back in and buy it back at a massive discount. This is where you will make most of your money on the long run. And then we'll go into more other, you know, picking individual stocks, how to invest in the stock indices, and, you know, all these other things. But what I'm trying to get across here is, dude, you need to take this course with us. There's a sample. I forgot to do that yesterday, huh? There's a sample. Where do I get that? I guess I got to get that out of my email again. Instead of doing that link, let me give you a free lecture so that you can decide for yourself how awesome or pathetic it is. Let me log into my email. Sorry about this. Which email? Yeah. And then let me search. I think it's this one. Yeah, let me get this email for you. There's a link in here that you probably should click on. Introducing the new stock trading course, lecture 1, lecture 2. Yeah, it's this one. Lecture 2 allows for us to expand our understanding of investment by comparing 2 or more investments, which is likely to perform better over time. Let's do the math and find out. Lecture 2 is free for you to watch, and there's a secret bonus. So let me get you that. Yeah, that's probably better, because the other one just is where you sign up. You might be like, wait, I'm not quite ready. I don't know if I want to invest in the stocks. Well, you should check this out. Do that one. The other one, can I even delete? Let's see. Okay. Alexander says there's so many stock trading courses out there. This is me. You're getting me. So Alexander, I'm sure there are many out there, but this one is mine. Okay? And I don't think anybody thinks the way that I do because I'm self-taught. Okay? So, you know, if I were to flex, I would say, how many of those people have 20 years of, or actually more than 20 years of investing experience? Because I was a venture capitalist, right? Not many, but several. How many have a master's degree from Harvard? Probably not many. How many people sat on a board of directors with George Soros, one of the most famous investors of all time? Probably none. But nonetheless, this is how I think about the world. And yeah, it's probably different. So if you've taken 10, this one is the 11th one that you should probably take. There, I flexed. Boom! Oh, no, but it's not even that, because Roderick, I got that formal education in my 40s to be a role model to my children. Okay? I could have bought a yellow Lamborghini, but instead I taught my children how to be A students. By the way, both my children are in very advanced classes, as advanced as you can get, and they're perfect grades. Yeah, perfect grades. Okay, 4.0 and beyond. So anyways, investment well made. All right, so anyways, here we are in the world. Here we are in the world, and we're on intervention watch. Okay, we're on intervention watch. This line has been important in the past. You get things like, oh my God, look at that. And you're like, wow, that's big. Oh, really? No, how about this one? Oh my God. But, even I think something like that is plausible, but I think it's less important now than it was. You should check out the Quant-in-a-Box video because I discussed it today. Okay, Sky Killer, define good. Okay. By the way, did everybody get the email yesterday, the, what do I call it, the week on the street? Did you guys get the week on the street email yesterday? Let's see if I have it. I don't even have it. No. Oh yeah, I do have it. Let's see, I can pop this open in a web browser. Oh, this one. The week on the street. Okay. Cool, Charlie got it. Okay, and so anyways, oops, this is what we're talking about here. Now, Charlie Airbender says, with so many PMI readings under or close to 50, could that suggest that we are entering into a recession? Well, so I sent this email out, right? So we can go and look at the UK. And by the way, we did this in the swing trading group yesterday. This is what we do in the group. Okay? So anyways, 48, 49, 45, 44. What? That's all bad news. That every part of UK PMI shows contraction. Every single one of them. Is it a sign that they're in recession? Yeah, maybe. It doesn't, I mean, it shows contraction. Oh, I have to hit back. Interesting. It's interesting that it didn't pop. In contrast to the United States of America, 51, 51, 51, 50. Expansion in every subcomponent of PMI. Okay. Now, Sky Killer says, well, Germany at 39, if you're not mistaken. Well, it depends. You want to look, you're probably talking manufacturing. I don't remember it off the top of my head, but that's likely German manufacturing. Okay. Yeah. Yeah. But again, we've known that for a very long time. Okay? Which, yeah, that is not good, right, Sky Killer? Yeah. Yeah, thinking of VW, which is funny because, you know, what is a VW? Well, there's the VW Touareg, there's the Audi Q, what do you call the SUV? Q, I don't, but they're nice looking SUVs. Then you have the Porsche Cayenne, and then you have the Lamborghini Urus. They're all the same vehicle. The Volkswagen Touareg, right? The Audi Q, the Porsche Cayenne, and the Lamborghini Urus. It's all the same vehicle. Isn't that funny? So one of them is 80, the other one is 100, the other one is 150, and the other one is 300. It's the same vehicle. I'm sure the Lambo's nice, but, you know, I'm a modest guy. I'm okay with the GTS. All right. So this is what we do in the swing trading group, guys. It's $99 a month. It's not too expensive. We do things like this. This week on Thursday when we meet, I really want to do group work again. We've pushed it off for a few weeks. Okay. But anywho, very interesting stuff. So we covered in about 90 minutes. We went through all those reports. All right, cool. Yeah. So here we are on Intervention Watch. I mean, look at this. I mean, these are hourly candles, and we've been 5 pips away from 150 for about 5 hours straight. It hasn't moved 5 pips in 5 hours. Huh? What do you think? Somebody's mucking around with it, huh? Don't you stink? All right. Okay, so you gotta watch that. Of course, the two things I'm primarily concerned with today is the stock market and the oil market. Okay. It's getting interesting again. Let's drop into a 15, and you could think about it now. Okay. Did Do you have it trapped? How did you mark your charts up? How do you have it trapped, like this? Okay. The thing is, we need to decide what the play is here. Is this going to be the theme of the day? If you're thinking downsy doodle, then you probably want to look at it from this point of view, and you're probably thinking more like pop on the open, drop on the day. Okay? Huh? What do you think? Yeah, probably a bit of both, huh? Lucas says, yeah, with all the other yen pairs. Yeah. Well, and that's a good way of looking at it. So like we could go to short-term indices, and yen is strong and dollar is strong. Yep. Oh, faux show. So my favorite whipping boys are Kiwi and pound. Okay? So one of the things I drive home a lot in our trading groups is that you do analysis, you develop a bias, and you know, for example, you wake up in the morning and you sell the pound. You wake up in the morning and you sell the Kiwi. You just don't know if you'll get an opportunity, but you know what you want to do before you even opened a chart. I mean, you're in the shower, gelling, and you're thinking, I can't wait to sell the Kiwi today. I can't wait to sell the pound today. If you open your charts and look for a trade, this is your failure. Okay? Instead, you say, oh, I want to sell at the pound. I want to sell at the pound. So now, because you know this, you're like, oh, look, pound, okay, pound is falling as expected. So here's the sell zone for today. So you've already missed it. Don't cry for me, Argentina, because tomorrow your trade plan will be sell around here. So it'll probably continue to fall somewhat, and then maybe another round, and then another round. Okay? And guess what? Tomorrow you know what to do. Now, Spence says, hey, well, what about selling kitty cat? Do the analysis fundamentally first. Okay? And once you've decided, now you know what to do. You just don't know if you're going to get the right price or the right time. Okay? So what do we know about price? Well, we don't know where this is going to fall. How could you? It's impossible. But you could say if, let me do it this way. If it goes somewhere in this zone here, you'll sell it. Somewhere around a retest of 67. So one way to play it is you go, cool, and now you're done. Great. Now you go to your auto stop, and you're like, I'm willing to risk 111 pips and have a profit of 333 pips. So 3-1, and now you have a happy face and you're done. You're done. Go home. You're done. That's what you're going to do the next 24 hours. Will it hit? Oh, I don't know. But it's not that complicated. Okay, now what if you disagree with it? Then you wouldn't have done the trade. You're like, Wayne, I don't like CAD. Okay, that's fine. Then you delete it. Not a problem. Okay? But the idea is you wake up in the morning and you sell the pound. What's the trade plan for today? Down, 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 up, up, sell. Down, 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 down. What's the trade plan for tomorrow? Up, up, sell. Down, 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 up, up. What's the trade plan for Friday? Sell. Down, 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 down. Then you say to me, and I can almost hear the audience, oh my God, but Wayne, what about the double bottom? If you're worried about that, then you're not a bear. You're a worrisome wart. Like, what more do you need to have some sort of reasonable conviction? Now, conviction is not selling high. That's just dumb. That's bankruptcy. But the conviction of this is solidly down. Solidly down. This is hardcore bearish. And you're worried about that? Then you don't know how to let your winners run. All you need is pound to weaken. Its economy is pathetic. Ask anybody that lives there, they'll tell you. And then what about Swiss franc? Retail traders are heavily short, so you know they're wrong. But also there's a flight to safety because of geopolitical risk. That will probably continue. It probably won't get better over the next couple of weeks. So why wouldn't you ride this for a month? Now, it might be wrong, but why wouldn't you try? Oh, Wayne, I don't trade pound Swissy. I only look at euro dollar. Okay, well, you do you. Yeah. Okay. Okay. You got a plan for today? This is how you day trade. If you're a bear, you know what to do. What if you're a bull? Well, you're thinking the exact opposite. You're thinking this, but I'd caution you because right now, on a 4-hour chart, that is counter trend and not probable. Now, it could work. You do you. But I would say, yeah, probably not. Okay? Yeah. All right. Do you have any requests? What's on your mind? How can I help? How can I serve you today? Euro Aussie short. Look at the spread there. Euro Aussie short. So let's look at where they rest today in the moment. Okay, Aussie's neutral. Euro is it's weak in the moment, but it's quite strong in general. It doesn't look like a good trade. Okay, the weak ones are Kiwi and pound. Strong one is Swissy, right? So that's where you go like, okay. Selling that one off the 21 probably makes more sense. This is set up for the counter trend, which is plausible, of course, but I'm very bearish on this in the long run. So you have short run counter trend forces, but what would probably happen with this is something like that, okay? And so even if it does go up, I wouldn't swallow the hook. Continuation would look this way. Plan A, Plan B. That's how I would set that up if I was me. I understand the counter trend forces there, but those are short term. It's profit taking, not buying. Nobody's buying that. Okay. Why is nobody buying this? Have you analyzed the RBNZ? Have you read their economic outlook? Have you looked at their import-export data? Have you looked at their inflation data? Have you looked at their employment data and their housing data? No, you're just guessing? Okay. Anyways, I would recommend that you look at these things because I have an 18-month outlook based on what they have told us, and I'm bearish. So I'll be bearish where we are now, and I'll be bearish up in here as well. And if it goes higher than that, I will stop being bearish for the time being. You see? So I'm not trying to be so arrogant to say I know the future. What I am saying is I have done the research, and I'm certain of my intentions. Okay? Technically, selling in here is understandable. Technically, selling up here is understandable. And anything outside of that, I'm not interested in right now. Cool. That's clarity of intention. I don't know if I'm right, but I know what I intend to do. And that helps with stress levels. All right? It's proaction, not reaction. Okay? That's one way of looking at it anyways. That's how I want you to go through the sequence, Richard. Yeah. Well, it's not all fundamental. So let's say you don't get it. Now, I think if you read all the reports, they're pretty clear. The RBNZ is pretty clear. And that's where I get the data from. But nonetheless, you would still do a relative strength. Kiwi is weak. Swissy is strong. Okay? So if you analyze like the shorter run, so since October to now, it kind of looks like Kiwi is strong. Okay? If you analyze the more current move, there's a breach of that trend. So you measure from that top if you want. Okay? Okay? Brian, I just got an email from you. Are you here? Hang on, I got a text. Well, just in case Brian's here, I got an email. He's like, is there a coupon code for the stock trading course? Yeah. Well, two questions that he had. Is there a coupon code? The coupon code is in here. Sign up to see your secret bonus. Okay. The second one, Brian wanted to know, in the course, do I go over will I expand on my method for developing a low risk portfolio while earning 10% a year and using covered calls and limit orders? He thinks it's a good strategy. Will I expand on that? Yeah. I'm passively, indirectly hedged, so I can sleep well at night. But I still have to balance and rotate the portfolio. Yeah, so we'll get to that probably in 5 weeks, maybe 6 weeks from now. Okay. I might even share an interesting strategy that, even writing puts, not just writing calls. Yeah. So those are option strategies, but I'm not doing them to be an options trader. I'm doing them to complement the stock trading. So yeah, it's cool, man. This stuff's cool. But see, here's the thing, like, this is why we're covering business cycles and seasonality. If you don't know where you are in the business cycle, or if you don't know where you are in the normal ebb and flow of the year, it's impossible for you to know how to balance your portfolio. So what do? You're just picking stocks. Someone sent me a stock tip today, and I'm like, I almost threw up all over myself. Right? Isn't that, there's a saying, and I remember this many years ago. My God, this must be 25 years ago. I read that if someone shining your shoes gives you a stock tip. You sell everything. And it was funny because this was probably the year 2000. I'm guessing. It was right before the financial crisis. And I'm on my way to being interviewed by CNN and Yahoo Internet Life. See, Yahoo went before Google. Yahoo was the big search engine, and they actually had a magazine, a printed magazine called Yahoo Internet Life. And they just happened to be in the same building in New York City. So my publicist had set this up where I go meet with CNN, and then I go check out Yahoo Internet Life. And by the way, Consumer Reports, their testing facility was in there, so you could kind of, in the stairways, you could look through the glass and you can see the testing room of them testing everything. So anyway, so I have a few tricks on how to manage my nerves. You can, I don't know, some people might be nervous going into talking to CNN. And one of my tricks is to just slow everything down. Get there early so you're not stressed about anything. And then, well, to relax, you got to change your breath, and you got to change your pace, and you got to organize your thoughts and all that kind of stuff. And so a classic trick is to stop for 20 minutes and get your, or 10 minutes and get your shoe shined. And in this building, they had a shoe shine guy, right? So anyway, so I go there and I get up in the chair, and he's buffing my shoes, and I got a beautiful suit on, and he gives me a stock tip. A sure winner. And 6 months later, people are scratching .com off their name. Yahoo Internet Life wasn't a magazine anymore. CNN didn't want to talk to young entrepreneurs making a big difference in the world. It was all dead. It was all dead within 6 months. So this guy giving me stock tips. So anyways, I don't trade that way. I don't invest that way. I don't have any type of risk like that in the portfolio, which is cool. I'm a macroeconomic trader and investor, so I'll teach you guys that. But so anyways, pretty funny. That is a true story. Yeah, it was all over. My guy ruined it for everybody. So the main point, Richard, is if someone gives you a stock trading tip, sell everything. It's all over. Sort of like strippers having 7 apartments. Yep. That's the end of the real estate market. Okay, now looking at the longer term situation, yen is still very weak. Just not going anywhere. So we lose sight. That's what happens at or the country club. Yeah. Yeah, Bernie Madoff, he was doing well in New York, and then he finally got a client, and he's like, this new client said, you should come to West Palm Beach. And they get to West Palm Beach at the country club, and that guy had been bragging to all the other members. And they're and so anyway, so Bernie Madoff goes down there and meets all these people, and they're just throwing millions at him. Hey, manage my money. And he kept saying, no, no. And finally, you know, then they put in real money. Not just million, but millions each. And he just went into, and within like a month, he had scooped up, you know, I don't know how much, hundreds of millions of dollars, just like that, boom, which he needed because, well, we know now he didn't have any money in New York. It was all spent. So he was right at the cusp of going bankrupt, went down there out of desperateness and just lined up another 500 million to keep going. So yeah, the country club, yeah. A good place to get stock tips? No. But it is an interesting lesson, Richard, like when it comes to raising money for a fund, It's actually important to note that part of the pitch really is giving people like that a story to brag about at the country club. What most amateurs do as a mistake when they're starting their fund is they go and they think they want to talk to rich people about how to get rich quick, because that's maybe how they still think. As young fund managers, they don't have a lot of money. It's a cold start. But it's not unusual. So you're thinking about, oh, if I get to start a hedge fund going, I'll become a millionaire. And then you go give a pitch like that to millionaires and they're not interested. They're already millionaires, right? Ultimately, what they're interested in is not really your returns or how quick you can make money. What they're interested in is what kind of story can you give them to brag in front of their friends at the country club? Should they buy a bigger yacht? Should they buy a faster car? Should they get a younger girlfriend? Or should they get a Forex trader that's an ass kicker? See, they want the story, Richard. And most people don't understand these concepts of raising money. They just like, look at me, I can make 52% a year. Well, whatever. Okay? But you have to convince them not to sell their 42-foot yacht to buy a 48-foot yacht. That's your competitor. No. Don't upgrade your yacht. Give me the money. And by the way, a 48-foot yacht very often is twice the money as a 42-foot. So your real competition is keep the yacht, give me the money, and I'll give you something to brag about. I'll give you stories. I'll give you an experience. Okay? Richard says, you got to become their friend. Yes and no. There's a line to that. You don't want to be treated like the gardener. And you'll get that in the Middle East a lot, where they're like, I'll give you some money, but you'll be my bitch. And you're like, no. And they're like, what? And you're like, no, I don't want your money. I'll tell you how our relationship is going to be. This is my expectation of how things are going to happen. And if you can't maintain a level of respect, then you will be disrespected all the time. And it will continue and it will get worse. So, right? Definitely not a friend, but you can't just be a service provider, right? And maybe a little bit more of the country club thing. They can't be your friend. They have to want to be your friend. There's a difference. Okay? Because if you're just a friend, they won't brag to their friends. You're just average. So it's more like they have to say, oh my God, I had an opportunity to invest into Richard Spencer, and let me tell you about this guy, right? He's a nutcase. The amount of work that he does, and the deep dive, and the research, right? He's insane. Okay? So you see, like there's a fine line. You can't beg, you can't be friendly, but you can be approachable. You know, like there's all these fine lines. Money's interesting because people do get emotional about money. So you got to understand the emotional side of raising capital. And it was the same working with angel investors. It was the same working with seed level venture capitalists, mezzanine guys. It's all the same. Okay? Right? B round, C round guys. It's still, it's different players, but the same or similar types of emotion. Raising money for funds. Doesn't matter what kind of asset it is. You'll see, especially, I guess it does matter. Like if you're going to start a real estate syndicate, it probably matters even more because you have more people involved, right? So anyways. Yeah, the psychology of money is really fascinating. Okay? You'll notice, even though it's important, like we talk about standard deviation or Sharpe ratio, right? It's interesting, even though it's important information, you have to read through it. And very often when you're raising money, and especially like if there's a dinner going and it's just sort of a one-on-one, if they say, oh, so what is your Sharpe ratio? Okay, they're looking for a way out. It's over. It's dead. Now, they won't want to tell you, and they may not want to admit it to themselves, so they can string you on for 3 or 4 or 5 more weeks. Oh, well, give me more of this data. Give me more of that data. Let me look at this, and what do you think of that? And you're like, F you. Sharpe ratio. No one, I mean, it's important information, and they should already know it. But to be asked, you have to understand nobody invests into you because of your Sharpe ratio. They may not invest into you because of your Sharpe ratio, but they would have already known that before going out to dinner. So now they've made a decision they don't feel comfortable, and if they're asking that kind of stuff, they're going to pass. They're going to waste your time. And what I mean by this is at that point in the relationship, they invest into you, not into your returns. Your returns were already good enough for the meeting, you see? So now they're trying to gel with you. And for whatever reason, suddenly the Sharpe ratio comes back in. You're like, Sharpe ratio? That means they don't know. They're uneasy. They're uncomfortable. They're not going to invest. It's over. It's dead. Dead. Might as well just get up and walk out. So anyways, I don't know how we got into that, but I do have to go. This is a busy, crazy morning. The stock trading course is today. It's today, okay? Nonetheless, watch oil. It's got my eyes. I'm concerned about that. Yes, watch the S&P 500 and NASI. Okay, pay attention to that. Pay attention to USD yen. Okay. Okay. Watch all these things. These are all important. Oh my gosh. But if this stuff brings concern, I want you to also back out. Take the stock trading course, because we're going to look at the bigger picture stuff that helps you set up a framework for your decision-making process. You don't pick stock because your shoe shine boy or the guy waxing your Passat is giving you a stock tip. There's a logical, intelligent way to make these decisions using data. Some of it is specific to the company, like beta. And you're like, what? I'm like, yeah. When you're making a decision, you're going to have to look up the beta. We do this in the risk-adjusted performance. Okay? Yeah. And sigma squared matters. These are all different math concepts, but the thing is you're trying to compare opportunities. But now on top of that, you know, we do probabilities in lecture 2, lecture 3, we do probabilities. Probabilities of what? Well, boom, bust, or flat, right? And so now we're going to talk about analyzing, knowing booms, bust, or flat. Okay? So you know where you are so you can make the right decisions and change your probabilities before everybody else. You need to know what the variables are, where to gather the variables, how to interpret the variables better than everybody else. Otherwise, you might as well not even be in the game. There's no room for average in doing this stuff. Okay? You're either before the herd or you're after the herd. And that's it. So I'll show you the math, but also the logic and the emotion. I'll see you later, guys. Cheers.